Now, RSP season is going to end in less than 30 days. The deadline for 2023 tax deduction is March 1st. So for this week, I thought what would be a better topic than to talk about RSP and figuring out how much RSP you should be buying to maintain maximum tax efficiency. Now, in this quick video, there will be two parts to it. The first, we're going to talk about the basis of RSP. How does it actually work and help you in terms of tax? And second part of it is steps that you can take to figure out how much RSP you should be buying. So if you understand the basis of RSP already, then probably the second part is more for you. You should skip there, or else you should watch the full video so you first understand how the basic tax system works and why certain amount of RSP would make more sense than the others. Now first, let's start off with the basis. How does Canadian tax system even work? Because everybody should know about this first, so then buying RSP would make more sense to them. When we work, obviously we'll get paid. Now, we don't get to keep all of that pay because we do have to pay the government some taxes. In Canada, since it's a progressive tax system, which means that as our income goes up, the additional dollar that we'll be making could be taxed at a different rate depending on how much money we've made already. For example, somebody making $150,000 per year, as you can see, will have to be taxed at the following percentage for different portions of the $150K. Together, this is the total tax that they have to pay the government for that year if they don't do any tax planning. Now, whatever bracket our total income brings us to, that is going to be our marginal tax rate for that year. This is how much percentage of tax I need to pay if I want to make an extra dollar of income for that year. So if I'm making $150K this year and I find out that I made $100 of interest from the bank as well, this $100 of interest will get added on top, and because I'm at 40.7% of tax bracket for BC, that means I should expect to pay $40.70 for that $100 back to CRA as tax. So this is why when it comes to clients that we work with, especially the higher income bracket ones, we have to be extremely careful about the sources of income we're getting, not only to make sure we're reporting them, but also to make sure we're not triggering too much additional income, especially from capital gains, because they can get very hefty very quickly. Alright, so now that we know how the progressive tax system works, this is where RRSP or any other deduction will come in. When we buy RRSP, we get to write off that amount on our tax filing, so we're reporting less income on paper to CRA. If I buy $1,000 of RRSP today, that means instead of making $150K, I'm now reporting that I'm making $149,000. Now, if my work has been taking off taxes accordingly, and let's say I'm working in BC, CRA would have received on my $150K income $44,150 in taxes. But because of that 1,000 RSP I just bought, my tax in this example should be $43,743 in BC. So when I'm filing my tax as $149,000 net income come April, CRA is going to look at this and say, whoops, we took a little bit too much from Jacky, let's return the difference back to him. And in this case, it's going to be $407. Now here comes the very important part. If you're sensitive to percentage or math, you're going to quickly realize that the $407 of tax refund I just got from CRA is exactly 40.7% on that $1,000 of RSP I just bought. First glance, when I first learned this, it almost felt like magic. They just somehow match up perfectly. Except it's not, it's really just how marginal tax bracket works. So in this example, and usually when it comes to tax planning, whatever income we get to write off either through RSP or other deductions, the amount of tax we're going to be saving, it's equal to whatever we written off times our marginal tax bracket. Now, sometimes you realize this is not exactly true, and this is something I'll talk about next, which has something to do with tax efficiency. Alright, so now we understood how the tax system works, how RSP works, deduction, and the marginal tax rate. Now we're ready to talk about what is max tax efficiency. So in the previous example, at 150K income in BC, if I buy $1,000 of RSP like before, I will expect $407 in refund, which is 40.7% on my $1,000. If I buy $10,000 instead, I will receive $4,070, which is still maintaining that 40.7% relationship. If I buy 20K instead, I still get the same thing. But the moment I start buying 30K, it is no longer exactly 40.7%. it is now around 40.06% for the tax refund I'm getting versus the 30,000 I just put inside. In fact, the calculator online shows that now my marginal tax bracket is going down to 38.29%. So how come? Well, that's because we've deducted too much and we now moved outside of the tax bracket that we were in. So recall the progressive tax chart in BC. And 150K gross income were actually put into this bracket. And what is the lowest number before I fall out of it? It's actually 127,000. So this is why when I buy 1,000, 10,000, or even 20,000 RRSP, I'm still maintaining the 40.7% relationship when it comes to tax saving because I am still within that tax bracket. But once I go 30,000, I'm now 120,000 income on paper, which puts me at the 38.29% tax bracket. In fact, because 127,000 is the lower limit of my current tax bracket, I can really only deduct 23,000 off of my 150K income before I completely fall out of it. As you can see, around 7,000 of my RRSP is actually giving me less tax saving because I'm now at the next tax bracket. And this is what we call tax efficiency. Max tax efficiency just means that we're trying to not fall out of our current tax bracket or buy enough so then we're just outside of it so that we're getting every single maximum tax write-off that we can get in our current tax percentage. Now, in my example, you're going to notice that at 150K, going to the next bracket, looking at the differences in our marginal tax rate, it's only a 2.5% difference. So in most cases, it actually doesn't really matter. It's negligible. It should not be a reason that for you to stop buying RRSP if you have the power to or you want to. But if we look at other tax bracket, falling from 38% bracket to the next one at 32, it's almost a 6% drop. That is a pretty big difference, and that might be enough to deter us from buying more RRSP than we need to. Now that we understand this, let's go to part 2 and look at how we can quickly figure out how much RRSP we may want to think about. But before we do that, make sure you help us like this video. That's the best way to support us, and join our private Facebook group where you can ask questions and get extra resource inside. So there are basically 5 steps to this. So step 1, we should first find our total gross income for 2023. Now, if you don't have your T4 yet, you can actually use your year-end pay stub, the last pay stub of 2023, and look at your year-to-date number to try to figure that out. It's going to be slightly off from the actual 2023 number because usually it doesn't land on December 31st. So you actually have a couple more days, but I think it's close enough you can still work with it. Also, remember to count bonuses if it's not included in your pay stub. I know some companies do not include that, so if it's not, make sure you add that on top. Now, step 2 is you want to add any external income that you may have received throughout 2023. So the common ones are interest, dividend, realized capital gain, side jobs, or any business you're running on the side. Now, usually, unless you have a huge deposit for that year, or you have a huge portfolio that is paying you a lot of dividend, I would say most times interest and dividend is probably negligible for you. If you really want to check, then check a bank statement. Also, check your trading platforms. They should be able to generate a list of all the interest or dividend you have received already. You can, if you want to be very safe, you can use those numbers as well. Realized cap gain, if you have sold something and there's capital gain, remember only 50% of it is included as your income. And also, if you're doing multi-year GIC, for example, like a 5-year GIC, you have to report that income for that year. So you don't report all the income at end of year 5 unless you're doing some very specific structure GIC, but a normal GIC, you do have to report the interest you received for that year. Add them all together, combined with your total gross salary, you're going to have your total taxable income for that year. Now, step 3 is you want to subtract any deduction that you can find to lower your income. For employee, if you have matching RRSP, then you definitely want to count your portion of RRSP, not your employer's, just you. Now, if you have any defined contribution or defined benefit plans, your contribution also is tax deductible, so you can count that as well. Now, other than that, there are all these known deductions that you can take as well. Now, you may look at this and you say, well, what about medical expenses? I hear people deduct that all the time. And you're right, you can use that as well, but it's actually a tax credit, which is applied at the very end of your tax bill, taking off directly from your total tax payable. What we want here is actually deduction. where it's applied to the beginning of your calculation and affects your total income and affects your tax bracket. We want deduction here, we don't want tax credit. So once you have all that, subtract that, and you're gonna have your year-to-date 2023 net taxable income. Now with that, fourth and final step is to visit your province's tax table to determine roughly where you're sitting right now in terms of tax bracket and how far off you are from falling outside of this bracket. Then maybe you want to think about buying not as much RRSP, just enough to keep you on edge for the current bracket, and then you can save those money into TFSA or FHSA or save it for next year's RRSP. And on this note, there are actually two scenarios where you may want to buy more RRSP and disregard this tax efficiency altogether, or you may actually don't want to buy any RRSP at all and then save that for future. And the first scenario is if you have an unusually high income for the year. Usually this is someone that have sold investment property before, or they have a large portfolio they just sold, or they got a big bonus from work, or their RSU has vested, they have initiated their stock options, etc. This will actually put the person in a much higher tax bracket than they usually are. And because of that, you may want to forego the tax efficiency altogether, because even if you drop a couple brackets, you're still going to be at a much higher tax rate than where you usually will be. So you may have the incentive to buy as much RSP as possible and use them all up this year. And the second scenario is the complete opposite, is if you're expecting a much higher income very soon, either because of all the reasons I just listed, or you're getting a promotion and you know it's gonna jump you at least 1 or 2 brackets. But anyway, that's basically it when it comes to figuring out RSP and how much you should be buying. It takes some work, it takes some studying, but it's not a terribly difficult or complicated thing to do. So you can definitely do it yourself. This is something I do with my client every January and February, get them to show me their pay stub, and I sit them down and help them figure out what's a good range to think about if they still want to top up. Now, if you have any questions regarding RSP, make sure you leave me a comment down below. I'll do my best to help answer you or point you to the right direction. Other than that, if you like these kind of videos, I do upload them every 2 weeks. So make sure you subscribe to the channel, click the bell button to get all the notifications in the future. Alright, this is Jacky. I hope you like this video. I will see you in 2 weeks. Bye!